Welcome back to the Profitable Mindset Podcast, everybody. Today, we're going head-to-head with the ultimate crypto showdown, Bitcoin versus altcoins. Over 20,000 cryptocurrencies are out there, but we're going to cut through all that noise and focus on what really makes this market tick.
Yeah, it's a constantly evolving space for sure. Yeah. And I think while that number can seem kind of overwhelming, we're really going to zero in on the major players and the trends that are really shaping the crypto landscape.
Bitcoin, the OG crypto, is still at the top, but tons of altcoins are emerging, promising crazy new tech, and let's be real, potentially huge returns. So the question is, can any of these altcoins, like Ethereum or Solana, actually knock Bitcoin off its throne?
That's the question, and that's what we're here to kind of dissect. I think to really unpack this battle for crypto dominance, we have to kind of rewind back to the very beginning, to Bitcoin's genesis. Bitcoin didn't just appear out of thin air, right? It was really forged in the fires of the 2008 financial crisis. And this wasn't just about some new technology. It was really a reaction, a statement against a system that many saw as broken.
Yeah, I mean, it was more than just tech, right?
Totally.
It was about a whole power to the people vibe, like taking back control. And remember, that message embedded in the Genesis block.
Oh, yeah.
The very first block of the Bitcoin blockchain. A permanent reminder of exactly what Bitcoin was created to challenge.
Yeah, and that message was a direct quote from a headline about bank bailouts. And it was incredibly symbolic, right?
Right.
Because it spoke to the core of Bitcoin's philosophy, which is decentralization.
Right.
Satoshi Nakamoto envisioned this financial system that would be free from the control of governments and institutions.
Right.
A system where individuals had true ownership and control over their money.
As revolutionary as that was, Bitcoin, it wasn't perfect.
Of course.
There were issues with scalability, speed, energy consumption starting to pop up. And that's where the altcoins saw their chance and entered the picture to offer solutions, right?
Totally. They saw the opportunity. The early altcoins like Litecoin, Ripple, Ethereum, they weren't just trying to copy Bitcoin. They were trying to fix its limitations or explore different use cases.
Right.
Litecoin, for example, wanted to improve transaction speeds.
Right.
Ripple focused on facilitating cross-border payments. And then Ethereum introduced the idea of smart contracts, which laid the groundwork for a whole ecosystem of decentralized applications.
So while Bitcoin was being digital gold, altcoins were adding functionality, utility.
Exactly.
And speaking of digital gold, let's talk about Bitcoin's staying power. It's still the champ when it comes to market cap and just overall brand recognition.
I mean, there's no denying Bitcoin's dominance.
Yes.
It's the most recognizable, the most widely adopted cryptocurrency.
Right.
And for good reason. And this digital gold analogy, it's not just hype. It reflects Bitcoin's core value proposition. The limited supply there will only ever be 21 million Bitcoins.
Right.
Which makes it inherently scarce, right?
Right.
Combine that with its durability, its divisibility, its transparency, and you have a very, very potent store of value. And let's not forget the growing institutional adoption. I mean, when major players like MicroStrategy and Tesla started adding Bitcoin to their balance sheets, that was a big deal.
Yeah, it signaled a shift. Like the establishment was starting to take Bitcoin seriously. But we can't ignore the fact that altcoins are also bringing some major diversity and innovation.
Yeah.
You can feel like you're drinking from a fire hose. Just the sheer variety of altcoins out there.
It's true. It's a lot to take in. And I think to make sense of it all, it's helpful to categorize them. So you have platform coins like Ethereum, Solana. These act as foundations for building decentralized applications.
Right.
Stable coins like Tether and USDC, they aim to minimize price volatility.
Right.
Which makes them more suitable for daily transactions. Privacy coins like Monero, they prioritize user anonymity.
Right.
And then you have DeFi tokens. These are powering the entire decentralized finance movement, which is essentially rebuilding traditional financial services on the blockchain.
And then there's the meme coins, Dogecoin.
Yes.
Which really captures the public imagination.
Of course.
And then utility tokens, which have specific functions within their ecosystems. I mean, it's a massive and constantly expanding universe.
It is.
But at the end of the day, there is this fundamental difference in how Bitcoin and a lot of altcoins are being used. Bitcoin is seen as that store of value, a hedge against inflation, almost like a digital Fort Knox. Altcoins, on the other hand, they're more about utility.
Yeah.
It's about actually doing things within this new digital landscape.
You hit the nail on the head. Bitcoin's strength is in its role as a store of value, whereas altcoins offer a wide range of utilities. Think about Ethereum, for example. Its smart contracts power a multitude of decentralized applications, from financial tools to games.
Right.
Or take Chainlink, which acts as an oracle, connecting blockchains to real-world data. So these diverse utilities attract a wider range of users and use cases, and they really drive adoption in specific niches.
So Bitcoin is about holding on to that value.
Right.
Altcoins are about putting it to work.
Exactly.
And a lot of investors, they're doing both, aren't they?
Yeah.
Holding Bitcoin for that stability and then dabbling in altcoins for the growth potential.
Absolutely. A balanced portfolio often includes both. It's not really an either situation. But to understand the differences, we need to go a little bit deeper into the underlying technology, specifically the consensus mechanisms that power these blockchains. So Bitcoin relies on proof of work,
right?
A process that requires miners to solve complex math problems in order to validate transactions and secure the network.
Proof of work, though, it's energy intensive, isn't it?
It is. It is.
And that's where proof of stake comes in, right?
Yeah.
Which a lot of altcoins are using as a more energy efficient auction.
Exactly.
Yeah.
Proof of stake moves away from that energy intensive mining.
Right.
And instead, validators stake their coins to participate in block validation. It's a much more environmentally friendly approach. It's often faster, and it's less reliant on massive computing power. But it's not a one-size-fits-all solution, right? There are variations of proof of stake.
Right.
For example, delegated proof of stake, each with its own trade-offs and potential challenges.
So like this constant evolution.
It is.
The tech is always being refined and improved.
Absolutely.
But when it comes to real-world adoption, who's winning that race?
Yeah.
Bitcoin or altcoins?
I think Bitcoin definitely has an edge when it comes to institutional adoption. We're seeing companies, hedge funds, even some countries adding Bitcoin to their reserves. El Salvador, for example, made headlines by adopting Bitcoin as legal tender.
Right.
But altcoins are also making strides in carving out these specific niches, right? Yeah. And we're seeing this in the burgeoning DeFi space, the explosive growth of NFTs, and even in enterprise solutions.
So it seems like Bitcoin is taking that traditional route, going for that mainstream acceptance, while altcoins are infiltrating from every angle, finding unique applications, and building these really dedicated communities.
You could say that, yeah. And this brings us to the question of regulation and security.
Yeah.
Two factors that really influence adoption.
Because with all this innovation, there's got to be a certain level of risk, right?
There is.
Especially in a space as new as crypto.
There are definitely risks. And because Bitcoin was the first mover, regulators tend to view it as more stable,
right,
almost commodity-like.
Right.
Altcoins, however, face greater regulatory uncertainty.
Right.
Some might be classified as securities.
Right.
And DeFi and stablecoins, they're attracting heightened scrutiny from regulators worldwide.
Yeah, it's uncharted territory for a lot of regulators. So it's understandable there's some caution there. But what about security?
Yeah.
We always hear about these hacks and scams in the crypto world.
Yeah.
How do Bitcoin and altcoins compare on that front?
So Bitcoin's proof-of-work network, with its decentralized structure and massive network of miners, has proven to be extremely robust. Its security track record is solid. Altcoins, particularly those with smaller networks or newer technologies, they can be more vulnerable. We've seen instances of smart contract bugs that lead to exports.
Right.
And the potential for scams is always there.
So it seems like with Bitcoin, you're betting on that proven security, but maybe sacrificing a bit of that potential for rapid growth.
Essentially, yeah.
With altcoins, it's more of a high-risk, high-reward situation.
For sure.
You could stumble on the next Ethereum,
right,
but you could also fall victim to a rug pull.
Absolutely. And it's important to remember that the crypto market, whether you're invested in Bitcoin or altcoins, is inherently volatile.
Yeah.
Thorough research and a healthy dose of caution are absolutely essential.
So I think that's a great place to sort of transition and talk about how someone might approach investing in this battleground.
Yeah.
If you're looking at Bitcoin, what are some of the strategies that people are using?
So with Bitcoin, you might consider a long-term holding strategy,
right,
what's known in the community as OD-Loon.
Right.
Dollar cost averaging is another popular approach, right? So investing a set amount at regular intervals,
right,
to kind of mitigate the impact of that volatility. And then for those who prefer a more hands-off approach, there are now Bitcoin ETFs that offer a simpler way to gain exposure.
So with Bitcoin, it's more about that long game, riding out the volatility, trusting in its long-term potential.
Right.
But with altcoins, the strategy seems to be pretty different.
It is. Altcoin investing often involves more active trading, identifying those promising projects early on, and capitalizing on emerging trends like DeFi or NFTs. Some investors engage in staking, which is locking up their altcoins to support the network and earn some passive income.
So it's more hands-on, looking for those mean shots. But regardless of whether you're in Bitcoin or altcoins, risk management is just crucial.
Absolutely. It's so easy to get caught up in the hype, especially during those periods of just explosive growth. But remember, the crypto market is still relatively young, and it's susceptible to sharp swings. And speaking of hype, we can't ignore the two elephants in the room, DeFi and NFTs. They've been making headlines, attracting huge investments, and it's all largely driven by altcoins.
So DeFi, or decentralized finance, it's basically rebuilding traditional financial services on the blockchain.
Exactly.
Cutting out the middleman, the banks, the brokers. It's about giving people more control over their finances.
That's the essence of it. DeFi aims to create a more transparent, accessible, and efficient financial system. So we're talking about decentralized lending and borrowing platforms, exchanges that operate without central authorities, and even insurance protocols built on smart contracts.
It sounds almost like a parallel financial system, one that operates outside of these traditional structures.
Absolutely.
And then there are NFTs, non-fungible tokens. These are unique digital assets that can represent ownership of anything from digital art to virtual real estate. It's a pretty mind-boggling concept.
It is. NFTs have definitely captured the public imagination. I mean, we've seen everything from Beeple's $69 million artwork to Twitter founder Jack Dorsey's first tweet being sold as an NFT. What's driving this frenzy is the idea of provable digital scarcity and ownership. So for the first time, you can truly own a piece of digital content. And that ownership is verifiable and tamper-proof thanks to blockchain technology.
It's changing how we value digital assets, right?
Absolutely.
It's not just about owning a JPEG or an MP3 anymore. It's about owning a unique, verifiable piece of digital history. But these are still relatively new spaces, both DeFi and NFTs.
They are.
There's a lot of hype, a lot of potential, but also a lot of risk.
Without a doubt, both DeFi and NFTs are still in their early stages of development. There's a lot of experimentation, innovation, and yes, risk. But the potential is undeniable. We're seeing real-world applications of DeFi from microlending in developing countries to more efficient supply chain management systems. And NFTs are transforming how we think about ownership in the digital age, not just for art and collectibles, but for things like identity verification and event ticketing.
So it seems like we're really on the cusp of a major shift. Not just in finance and technology, but in how we interact with the digital world as a whole.
Totally.
But these innovations aren't happening in a vacuum. There are external forces at play, like government regulations, that could really impact the crypto landscape.
Regulation is the elephant in the room for both Bitcoin and altcoins. And it's an evolving landscape with governments around the world grappling with how to approach this new asset class.
I mean, on one hand, you have countries like El Salvador embracing Bitcoin, making it legal tender. On the other hand, you have countries like China cracking down on cryptocurrencies, banning mining and trading activities.
It's a mixed bag. Some see regulation as a necessary step for wider adoption, providing clarity, legitimacy to the crypto space. Others view it as a threat, potentially stifling innovation, undermining the decentralized nature of cryptocurrencies. One area of particular interest is the emergence of central bank digital currencies, or CBDCs.
CBDCs, the digital version of a country's fiat currency issued and controlled by the central bank. Some see this as the government's way of sort of co-opting the crypto revolution, offering the convenience of digital transactions, but with the control and oversight of a central authority.
It's a complex issue. CBDCs could potentially streamline payments, reduce costs, and increase financial inclusion. But they also raise concerns about privacy, control, and the potential for governments to monitor and even restrict financial transactions. So how CBDCs will ultimately impact Bitcoin and altcoins is a subject of much debate.
It seems like we're in this period of transition where we have this innovative, decentralized technology that's challenging the traditional financial system, and governments are trying to figure out how to respond.
Right.
It's a pretty fascinating time to be watching this space unfold.
It is.
But amidst all this talk about technology and finance and regulation, we can't lose sight of the environmental impact.
Right.
Bitcoin especially has been criticized for its energy consumption.
Yeah, the energy consumption of Bitcoin mining is a legitimate concern. The proof-of-work consensus mechanism, while secure, requires massive amounts of computational power, which translates into a significant energy footprint.
But there's this growing movement within the Bitcoin mining industry to adopt renewable energy sources like solar and wind power.
Yeah.
Could that lead to a more sustainable approach to Bitcoin mining?
It's definitely a step in the right direction.
Yeah.
And it's worth noting that many altcoins, by using proof of stake or other less energy-intensive consensus mechanisms, have a much lower environmental impact by design.
So it's not a monolithic issue.
It's not.
The environmental impact really varies depending on the specific cryptocurrency and its underlying technology. But beyond just the environmental concerns, there's also the social impact to consider.
Absolutely.
Cryptocurrencies have the potential to empower individuals and communities, especially in regions with limited access to traditional financial services.
Yeah, financial inclusion is one of the most compelling aspects of cryptocurrencies. They have the potential to bank the unbanked, providing access to financial services for those who have been excluded from the traditional system.
Imagine being able to send money across borders instantly. And cheaply, without relying on intermediaries who might charge these exorbitant fees.
Exactly.
Or think about the potential for micro-lending platforms that could empower small businesses in developing countries.
Yeah.
It's about leveling the playing field.
It is.
Giving people more control over their financial lives.
It's a really powerful concept. And it goes beyond individual empowerment.
Yeah.
We're seeing blockchain technology being used to create more transparent and accountable systems for things like aid distribution, supply chain management, even voting.
So it's about harnessing the power of this technology to address real-world problems.
It is.
To create a more equitable and just society.
Absolutely.
But let's be realistic. The crypto world isn't all sunshine and rainbows. There are risks, scams, hacks. These things make headlines all the time. It can be a pretty daunting landscape for newcomers to navigate.
You're right. The crypto space, like any emerging market, attracts its fair share of bad actors. We've seen scams, rug pulls, and hacks that have resulted in significant financial losses. So it's crucial to approach this space with caution and to do your due diligence before investing in any project.
So don't just blindly follow the hype.
Exactly.
Look for signs of legitimacy, like a strong and transparent team, a clear and well-defined roadmap, and an active and engaged community.
Absolutely. And remember, never invest more than you can afford to lose. The crypto market is volatile, and there's always the potential for unforeseen events. If something sounds too good to be true, it probably is. A healthy dose of skepticism is essential.
So for someone who's listening to this and thinking, okay, I get it, crypto is interesting, but where do I even begin? What's the first step?
Education. Take the time to learn about Bitcoin. Understand the fundamentals of blockchain technology. Explore different types of altcoins and their use cases. And familiarize yourself with the key concepts and terminology. There are countless resources available online, from articles and videos to podcasts like ours.
It's about doing your homework.
It is.
Before jumping into the deep end.
Exactly. And don't be afraid to connect with the crypto community. Ask questions, engage in discussions, and learn from others' experiences. It's a very vibrant and supportive community for the most part.
And once you have a solid understanding of those basics, you can start experimenting with small investments. Maybe buy a fraction of a Bitcoin, explore a stable coin, or even dip your toes into the world of NFTs.
Start small. Learn as you go. And don't be afraid to make mistakes. That's the best way to approach any new investment, especially in a space as dynamic and fast-paced as crypto.
This has been an incredible journey through the world of Bitcoin and altcoins.
It has.
We've covered so much ground. From the origins of Bitcoin to the latest developments in DeFi and NFTs.
We've explored the technology, the potential, the risks,
right,
and the impact this new asset class is having on the world. And it's clear that this is just the beginning.
Yeah.
The crypto space is constantly evolving.
Right.
And the future is full of possibilities.
And that's what makes it so exciting, isn't it?
It is.
The sense of being part of something truly transformative.
Mm-hmm.
Something that has the potential to reshape the financial landscape.
Right.
And empower individuals in ways we're only just beginning to understand.
Absolutely. It's a journey worth taking.
Yeah.
And we're all in this together.
Feels like we're watching this paradigm shift happen, right? Moving away from these centralized systems toward a more decentralized future.
Mm-hmm.
And when we talk about decentralization, we have to mention the hype around Web3.
Right.
We hear it everywhere these days, but what exactly is it?
Yeah. Web3 is often described as the next iteration of the internet, really built on those foundations of blockchain technology. And it's about shifting those power dynamics of the internet, moving away from centralized platforms controlled by big tech companies and toward a more decentralized, user-centric model.
So instead of companies like Google and Facebook holding all our data,
right,
monetizing it, the idea is that users will own and control their own data. It's about empowering individuals in this digital realm.
That's the core idea. Web3 envisions this world where users are in control.
Right.
Where they can decide how their data is used and benefit from its value directly. And this is where cryptocurrencies come in.
Yeah, cryptocurrencies are like the fuel of Web3, right?
Totally.
They're used for payments, governance, even as incentives for people to participate in the network.
They're the lifeblood of this new internet, you know?
Right.
Imagine a social media platform where users earn tokens for creating and sharing content, or a decentralized marketplace where creators can connect directly with their audience, no middleman taking a cut. These are just a few examples of what Web3 could look like.
I mean, it sounds radically different.
It is.
From the internet that we're using right now.
Right.
But how does it actually work? What does this Web3 world look like in reality?
Well, we're still in those early stages of development, so the picture's still forming, but we are seeing glimpses of what's possible. So decentralized social media platforms, play-to-earn gaming ecosystems where players actually own their in-game assets,
right,
and decentralized autonomous organizations, or DAOs, that allow for collective decision-making without these traditional hierarchies. These are just a few examples of Web3 in action.
I mean, it sounds like all these new possibilities are opening up a world where individuals have more control, more ownership, more opportunity to actually participate in the digital economy. But this also sounds incredibly complex. Is Web3 just for like the super tech savvy?
Right.
Or can anyone get involved?
Yeah. Well, the technology can seem intimidating at first.
Yeah.
But the user experience is getting better all the time. Yeah. There are these user-friendly wallets now, browsers and applications that are making it easier to interact with Web3. It's kind of like the early days of the internet where you needed a certain level of technical know-how to navigate it.
Right.
But as the technology matured, it became much more accessible to the average person.
Right.
And I think the same thing is happening with Web3.
So the barrier to entry is getting lower. That's good.
Exactly.
Now, another term we hear all the time alongside Web3 is the metaverse.
Yeah.
What is it? How does it fit into this whole picture?
So the metaverse is essentially a persistent shared virtual world.
Yes.
It's like this convergence of physical and digital realities where users can interact with each other, attend events, create and trade digital assets, even build businesses, all within a virtual environment.
That sounds like something straight out of sci-fi.
Yeah.
It's like stepping into a video game.
It is.
But with real-world implications.
Right. It's a concept that's still evolving, but the potential is vast. Imagine attending a virtual concert with friends from all over the world, exploring a digital museum, or even buying virtual real estate that you can then develop and monetize. Those lines between the physical and digital worlds are blurring. Yeah. And the metaverse is really at the forefront of this convergence.
And cryptocurrencies and NFTs, they have a big role to play in the metaverse.
Huge role. So cryptocurrencies are used as the native currency within a lot of these metaverse platforms, which allows for these seamless transactions, value exchange between users. And then NFTs are used to represent ownership of digital assets within the metaverse, like virtual land, avatars, clothing, in-game items.
I mean, the implications are crazy. You could buy a piece of virtual land, develop it, and then rent it out to other users. collectors.
Absolutely.
Or you could design some unique digital fashion item and sell it as an NFT. The possibilities feel endless.
They do.
But for someone new to all of this, it can feel overwhelming. What advice would you give to someone who's excited about crypto, Web3, the metaverse,
right,
but they just don't even know where to begin?
I think my advice would be to start small and focus on learning. Choose one area that interests you, whether it's Bitcoin, a particular altcoin, DeFi, NFTs, or the metaverse.
Right.
Then do your research, read articles, watch videos, listen to podcasts, experiment with small investments, maybe in a stable coin or a fraction of a Bitcoin.
Right.
Don't be afraid to make mistakes because that's how you learn. The most important thing is to be curious, to explore, and to enjoy the ride.
It's a vast and exciting landscape.
It is.
And there's something out there for everyone.
Absolutely.
The key is to just take it one step at a time,
right,
learn as you go, and never stop exploring. Well, this has been an amazing deep dive into the world of Bitcoin, altcoins, Web3, and the metaverse. We've covered so much.
You have.
And I hope our listeners are feeling more informed and empowered to navigate this crazy evolving space.
Absolutely. It's been a pleasure sharing our insights.
Yeah.
And we encourage everyone to keep exploring. The possibilities really are endless.
Thanks for tuning in to the Profitable Mindset Podcast, everyone. We'll be back next time for another exciting discussion on the world of finance and investing.